Welcome back to Fast Money. Another big week of earnings coming up. Materials, tech, industrials, and some of China's biggest names all on deck. And luckily, we've got Cohen Carter here for an old school options action look at one legacy tech stalwart. So, Carter, you've been looking at Cisco. What did the chart say?
That's right. We got two identical charts. Let's get right to them. Cisco is a textbook instance of a stock that broke out post-plunge from tariffs. Above its February high, checks back to the penny and has reasserted itself. Second of two identical charts. Where might it be headed? If you look at the stock's internal trend line, it projects to around $75, $76 a share. We're buyers here.
Mike, what's your trade here?
Yeah, the options market applying a move of about 5%. That's in line with the average. I would buy the October 72.5 calls and then finance that, hoping for a little bit of vol crush by selling the September 26, 66 puts and the upper 78 strike calls, and that's going to basically benefit from that vol crush that you see right after earnings.
Yeah, and Mike, by the way, we got to ask you about some of the newest tech players. We had an IPO this week, Firefly, and so what are you seeing in some of the new issues?
Well, I would say that Circle and CoreWeave are the two that really stand out to me. Both of these things are trading more than 300 million notionally each day. That would actually put them in the top 100 in terms of the Russell 1000 in terms of options activity. So a lot of activity there and some big moves expected.
All right, so we got a little action on the old and the new kids on the block. Tim, where do you go?
Vol crush scares me, first of all. That sounds
sounds
ugly.
painful.
I don't know. I mean, yeah, it does. But I like Cisco. I'm long Cisco. I think there's a much more predictable earnings stream. I think the company is obviously cheap. Maybe it should be. You're only getting mid-single digits. But I think growth. I think there's a chance for more. But their software and security business is growing, and it's real. And the networking dynamic there is something that at least is also working from what we've heard from clients. I think this is a case where you've got, I think you've got upside here. And I think in the current environment, I would stay long Cisco.
Yeah, I like that 20% implied move. That's pretty intriguing around CoreWeave. A lot of leverage there on the balance sheet. So I think that's the one that I'd be looking to play.
So, Carter, I have a question for you as a technician. At what point do you start looking at the charts of a recent IPO?
Right. So in principle, as a time frame, it's very subjective, but I like a standard 2-year high-low close chart. Now, you can sort of get a view of a stock once you have at least 6 months by doing, instead of daily bars, you can do 60-minute bars. So you get then a 60-minute, 150-day, so to speak, moving average, 150-minute. And if one were pressed, why there's insufficient price history, I would be long CoreWeave.